How's it going, everybody? It is Dennis, and yes, the title is true. I am no longer reinvesting into YieldMax ETFs, no longer putting cash into YieldMax ETFs, putting money into them from the cash of my portfolio. And the reason is, well, there's many of them, and we're going to get into it in this video. But before we even do, I just want to make it clear, I am not buying curve ETFs. This is not what this video is about. I'm not switching over to curve ETFs. My dividends I'm earning from YieldMax ETF will not be going over to curve. And secondly, I'm not selling out of YieldMax ETF to buy any other things. I'm continuing to hold YieldMax ETF, and I'll continue to hold it until it pays and pays and pays and pays all it can, because there's no point of selling if in a couple months, in a half a year, I'll be able to make all my money back, especially from TSLY, where I have only a couple months left before it pays itself off, with AMZY and AMZY as well. So there's no point of me selling out of these positions. I'm just going to continue to hold them, but I'm no longer reinvesting into them. And before we get into the reason why I'm no longer reinvesting into it, let's go ahead and take a look, of course, at the funds I own. So I own AMZY, I own AMZY, I own GPIX, I own TSLY, AMZY, YMAX, and those are the 6 different ETFs I own. Of course, AMZY, AMZY, GPIX, TSLY, and AMZY. These are all single stock ETFs, and YMAX, of course, is the whole bunch of all the ETFs collected together to create YMAX. Of course, you can also take a look at how much I have in these ETFs. I have around 5K in AMZY, I'm down 3.35%. I have around 6K in AMZY, and that's up 5.54%. I have 4.8 in GPIX, and that's down 8%. I have TSLY, which is 5.5K, and that's down negative 44.5%. And then there's AMZY, which is 2K, which is a new position for myself, and it's been doing quite bad recently. But I think in the future it's going to do quite well, because I do believe in the underlying AMD. And that one is negative 24.97%. And of course, we have YMAX, where I have almost $10,000 invested, and that is down 6.37%. So if it was not down 6.37%, then it will be at $10,000. Now, of course, this is not including the dividends and distributions I received from these funds. If you look at the dividends and distributions, if you're new to this channel, you've never seen my videos, this is how I track my dividends and distributions every single month and week. TSLY, 4,305 for 2024, 2,176 from AMZY for 2024, AMZY 798, GPIX is $967, AMD is $175, YMAX is $1,571. I just deleted that. And then the grand total for 2024 was almost $10,000, just $5 off. And of course, for 2025 so far, we made 322, 300, 193, 108, 158, 306, and a total of $1,389 for 2025 so far. And of course, the majority of these dividends were reinvested back into the funds or different strategies. So none of this is really cash, hard cash in my pocket. Most of this is reinvested, and some, of course, did have value loss. So before if anybody says, is this all cash? It is not. Most of it was reinvested. All of it was pretty much reinvested back into portfolio, into options, back into these funds and other funds, and therefore did experience some kind of value loss on the meantime. So taking a look and talking about why I decided to leave these funds. Well, the reason I decided to leave these funds is because before when I was investing in these funds, if you do or do not know, I was in school, I was finishing up college, and therefore I did not have much time to trade option strategies or anything of that sort, nor did I have the experience to do so. While I was buying these ETFs and owning these ETFs, and they were delivering me dividend income, I, in the meantime, was finishing college, of course, and also learning how to trade options. I was learning how to trade options, spreads, poor man covered calls, all of that sorts. And if you guys watch my videos, you guys would know that I started with Riot. I was able to come out a little bit over break even. I was a positive on it, but I did lose on the value of the shares, but I did win on the return I had on the actual calls that I was selling on it. So I had Riot, I had TSLY, I had TNA, I still have TNA, which currently I'm thinking of moving out of. And now we have SPY that I'm also trading, and we also had Mara at one point as well. So I've been around, I've been testing, I'm trying to see what is the best way for me to trade options, and I think I finally got it figured out to an extent. I think I know to an extent of how I'm able to create income as well as value growth without relying at YieldMax ETF or curve ETFs or Roundhill. Of course, like I mentioned before, I'm not selling out of these funds. I will not be selling out because they'll just pay me my cash back, and I'll just be at break even or profit once they pay me my cash back. It'll be no money out of pocket from me. Another thing, I might not be reinvesting cash into it, but I will be reinvesting margin into it. We're going to get into that in a second, what I mean by that, because this is all a part of the strategy that I'm trying to do for 2025 to improve my returns for my account as well as the value growth. Now, if we take a look, of course, with all YieldMax ETF, as you can see right here with TSLY on the screen, we're down negative 44.58%. That's just how these funds are. There's NAV erosion. If you don't want NAV erosion, go for curve ETFs. They give you a lower yield, but they provide you some value growth as long as the underlying is heading upwards. They will also go down the same way TSLY will go down. They still trade the same strategy. They don't actually own the stock. They have synthetics, but the way they do it is that their strike prices are higher, and therefore they're able to have more room for growth on a weekly basis, and therefore they're able to capture more of that upwards trend in growth. But when the market goes down, it will go down as well. And if you value dividends as I do, so I want my 50-70% return from TSLY, I'll take the NAV erosion any day as long as I'm getting my cash in. And if you take a look at the total value, this is I did before in a different video, curve versus YieldMax. At the end of the day, the difference is 5 to 10% on TSLY. I'm pretty sure it's like close to 10%. And if you look at other funds like AMZY and AMZP, it's a little bit closer on that scale, with some of them actually winning over curve ETFs. But in general, if you want cash and you want it, you want all the cash that they earn to be given to you, you go for YieldMax. If you want growth and 25%, 30% dividends, you go for curve ETF. Just the way you want it, right? For me, YieldMax is okay. I'm okay with waiting until I get my full payout back. Many people say you won't get your payout back, but that's been proven wrong with funds like Misty and Coney and other funds as well. So it just depends on the time frame you're willing to own these funds and what you believe the underlying will do. As you can see with AMD, I believe that AMD, the underlying, will go up in the near future. Therefore, I invested into AMD. Was it the wrong choice currently to do it as early as I did? Maybe. I'm down negative 24%. Could have I waited a little bit to get into it? Maybe. But we'll see. We'll see how AMD works out. AMD is still paying me dividends. Currently, the dividends are not beating the NAV erosion. As you can see, I'm down $175, $158. So in total, I'm up only $300 on dividends, while I am down negative $719 on AMD with this share value. So technically, I'm still negative. What is that? I'm down $400-ish on AMD. So that hasn't paid itself out. For that to pay itself out is going to take quite a while because that is a new position. But we also have YMAX. What am I planning to do with YMAX? Well, YMAX, as you can see, it's a large position in my portfolio. It's 11.83%. I am down currently 6.37%. But with YMAX, I am thinking of holding YMAX long term compared to the other ones, and I'll continue to reinvest into it, of course, with margin, not with my own cash, and we'll get to that in a second. Like mentioned, I'm continuing to hold YMAX because YMAX has been quite stable, and as well as it gives good performance and its weekly payments. And weekly payments are always great to have, especially if you're an options trader and you need income coming in every week, so you could do option trades every single week or month, right? So there's that. Now, why am I deciding to do what I'm doing? Meaning, why am I deciding not to reinvest cash in my portfolio back into these funds? Why am I taking the dividends out and holding them in cash? As you can see, I'm currently holding $1,000 in buying power. Why am I not using that $1,000 in buying power? Well, I'm using that $1,000 in buying power. I'm holding that cash that I'll be receiving from TSLY, from all these different funds. I'm holding that cash so then I could purchase calls or I could purchase option calls on the S&P 500, on QQQ, or IWM, or the Russell 2000. You might be asking, why am I doing that? Well, this is one of the strategies that I've been running for a little bit with TNA, and now or for a decent bit for TNA, and a little bit in the S&P 500 currently, and it has been proving itself pretty good. It's been proving itself quite good. I bought this back in November 18th in 2024, and I'll show you guys the return of that in a second. But we bought this back in November 18th, 2024, and so far the bottom call, or the long call, the leap option you purchase, is up 11.18% or $984. If we look at the simulated returns, we can see for us to break even on this call, the S&P needs to go up. Here, give me one sec. The S&P needs to go up at least 3.24% for when the contract ends in December for me to be at break even. It needs to go up 3.24%. As we know, the S&P goes up around 8 to 10% a year on average. Of course, this is not definite or 100% to happen, but assuming historical evidence is true, and as we know it is true because if you look at S&P charts, it does go up a lot, all right? S&P chart, we look at year to date, or I mean on the 1 year, you can see it's up 23%. Of course, this year was different. We had a lot of things that caused the market to go up. But if we look at the 5 year, it's up 83.94%. And even when we had downturns, if you just waited a little bit, it'll just balance itself out. And of course, you could be buying at these lows as well, buying more contracts at the low. Therefore, you lower your average cost. It's the same thing as shares. You could lower your average cost on options if you decide to. But of course, and then if you had the huge trend upwards, so we were what? We were at 7.97%, then we got up to 81. That is almost like what? 70% growth in a matter from 2022 to 2025 now. So as we know, S&P goes up, market goes up. Rarely you want to bet against it. And for me, running the poor man covered call just brings good yields. Okay, if we take a look at the contract I just moved for next week, today of course is February 13th. I've moved this over to next week, February 21st, and I was able to earn myself $136. Currently I'm down 51%. I do this because, you know, it's down 51%, but if we look at simulated returns, as long as the S&P is below 613, I will make all my money in my pocket. All the money they gave me, I will keep in my pocket. I will not have to return it, or I won't have to go ahead and move it to the next week, which, by the way, even if it is above 613 or it's at 613, if we go ahead and take a look at the Bollinger Band, which is one of the things I track when I do trades on options. If you look at the Bollinger Band, we can see that the Bollinger upper band, or right here on top, as you can see on the screen. If you look on the left side of the screen, it says it's at $611.40. What does that mean? Well, that means usually the market will trend around $611.40, and then the lower part of $593.22. So you can expect the market to be around that range. Of course, there's been times, as you can see over here back in January 21st, where it peaked above that range, and then sure, it happens, it could peak above that range, but most of the time it's like 0.5%, 1% difference. And with that, you could still do a quite good trade on your contract. So say 613 by end of next week, it's at 614. I could go ahead and do a contract trade for the next week over. So that'll be in February 28th or 29th, whatever the end of the month is. I think it's the 28th. I could transfer it over to February 28th. I could go up to like 615, 616, still make income as well. It won't be $130 or $100. It'll probably be like around $20 to $50, but you still make income. You move it over to next week. You take a little bit of a low income for that week, but you're still good. Your bottom call is still gaining in value. So your S&P, your lower contract, if we take a look, if it goes up to, say, 614, your S&P contract on February 21st will be worth $1,298 in profit. So therefore, you would gain yourself $300 pretty much in profit on the lower end. And then you can move it up to the next week and get yourself another $30, $50 to the next week as well. So that's a total of $330, $350 earned in a matter of a week. Of course, you're not going to be selling your lower call, but if you decided to, that's how much you would have earned in a matter of that week. So that is why I'm deciding to keep that $1,000 in buying power, and why I will continue to add to that $1,000 in buying power, because as you can see, these lower contracts are expensive. I purchased this one contract for $8,800. That $8,800 is a lot of money to put up front. And of course, I don't, like I mentioned before, I don't want to sell my shares of all these YieldMax ETFs. There's no point in me selling these shares. I might as well have them run until they reverse split and reverse split again and again and again, as long as they're earning me income to which I could go ahead and invest into my option strategy. Of course, the S&P is not the only thing I have to invest in. I also have QQQ, which I can buy, which also is around the same price range, around the $8,000 to $9,000 mark. That pays double the amount on weeklies usually, because it is a little bit more volatile. And of course, there's also IWM, which pays a little bit less than the S&P, but it moves less as well. And also the contracts are 3 times less, or a third of the price. They're around $3,000 each, around $3,000 to $4,000 depending on what delta you are purchasing. But this is not a video about options. This is just going over why I'm deciding not to reinvest into YieldMax ETF with my cash that I'm earning from dividends and options. Now, what am I doing with the margin? How am I deciding to use my margin? Well, we'll continue to run the strategy when it comes to YieldMax ETFs, where we get week A payments, we put into week B payments, we put into week C. But instead of putting the $1,000, let's say you make $500 a week, instead of putting $500 a week into the next week, you take 50% of the value in margin, so you'll have $250, and then 50% of the $250 you'll go ahead and throw into the next week payment. So that's going to be 25%. 25% of the value earned will be going into YieldMax or whatever fund you decide to, and then the other 25% will be going into JEPQ. Yes, you heard that right. It'll be going into JEPQ. JEPQ. The reason it's going to be going into JEPQ is because I want to start building myself a long-term position. I know a lot of people disagree, but I think JEPQ is a quite good hold for me personally, because I'm thinking long-term. Sure, you want a lot of cash in the beginning, and I do agree cash is great and getting a lot of return is great, but I'm thinking long-term. I have a long-term idea for my investments, right? I have a long time to go, hopefully a long time to go for my investment account, for my portfolio, right? So I want to add it to JEPQ. I want to add into JEPQ. I want to add into GPIX, which is the Goldman Sachs. I'm pretty sure the Goldman Sachs, the S&P one, covered call fund, right? So I want to add it into those positions to have a safe 9 to 10% return, as well as a good value growth as well. As you can see, in a 1 year, it grew 11.64%. Of course, like I said before, it's kind of biased. We've had a pretty good year when it came in 2024 on the return on the S&P and QQQ, but 11.64% on a good year, as well as 9 to 10% return on dividends, is not too bad at all. And like I said, this is my safe position. Only 25% of every single week's value is going to go into JEPQ, and the other 25% is going to go into YieldMax. So like I said, the share count that you're going to see growing is going to slow down by a dramatic amount, but here is my plan. My estimate currently is, as I'm earning around $3,500 a month from my options and from my dividends. If that continues for month after month, that means in a matter of 2 to 3 months, or 2.5 to 3 months, I should be able to buy a contract. When I'm able to buy a contract, my income will increase by around $400 a month. So say I buy an S&P contract. If I decide to go S&P, if I buy an S&P contract expiring in a year, I'll be able to gain $400 on the covered calls I sell on the top side, right? So that's just covered calls. That's not calculating for any value growth on the bottom call or the leap call. I'll be able to earn another $400 additionally. That $400 will compound now into the next contract that I decide to buy. That contract now will take around 2 to 2.5 months to buy. In 2 to 2.5 months it takes to buy that one, assuming that our return is around, now with the extra $400, is around $3,500 to $4,000 a month. Then it's going to take us, like I said, 2 to 2.5 months, and now you upped the amount of income you're getting by another $400, assuming you buy another S&P contract. Of course, I'm going to look if I want to buy QQQ or S&P, depending on how the market moves. But assuming it's the S&P and we decide to continue by S&P, I'll be able to have around 3 to 4 contracts bought by the end of the year. That will increase my income by around $1,600 a month in a matter of a year, or by the end of the year, I'll have an extra $1,600 a month coming in just from that option income, not including the fact that I'm using 50% margin from that cash that I'm holding to then put into YieldMax as well, and as well as into QDT. I kind of went over QDT. I'm also reinvesting in QDT. This has been a stable fund as well, as you can see, also down 6.59%, but this is also stable, as well as YMAX. Both of these funds are pretty stable in my eyes. Not financial advice, of course, but I'm going to continue to reinvest into YieldMax, of course, still, like I said, but with margin. Only margin is going to be going into YieldMax and to QDTE and to Roundhill. But of course, we're going to have JEPQ as well. So we're going to have value growth from JEPQ, dividends from JEPQ. We're going to have dividends still coming in from all the YieldMax ETFs, as well as QDTE and YMAX. And they're going to continue to grow on and on and on, of course, because like I said, we're going to use margin to go ahead and invest back into them. So it's going to be growing, but just 25% at a 25% rate compared to what we had before, or 25% of the rate we had before. So the share counts are going to grow a lot slower, but they're going to be growing. They're going to be there. And estimated wise, by the end of the year, assuming we're starting at 3,000, let's say 3,000 at the low, we're at $3,000 a month currently. By the end of the year, we should be at $5,000 a month, assuming that option income stays stable, assuming that contract values stay stable and I'm able to purchase for the same value, and assuming that yields from dividends stay stable. Yields from dividends might go up. QDT dividends might go up because with share count. YMAX dividends might go up because of share count. And of course, all the other YieldMax ETFs, assuming, of course, thinking about where the underlying stocks will go. So I know that's a lot. That's a lot I've talked about, but that is what I'm looking at for the future of my portfolio. Yeah. No more cash. So no more cash being received from dividends. So say if we take a look, for example, like I got from AMZY for this week, I got $173 and $109, right? For February 14th, I'm going to be getting $173, $109. And of that $109, $173 is going to go into my portfolio in cash. It's going to stay in cash. And I'm going to take 50% of that value in margin and reinvest that to next week. So $173, $109, that's roughly, let's say $200, almost $300, including YMAX as well. I'm not including the YMAX payment. The YMAX payment was how much? 87. So yeah, that's like $400 from only the YieldMax ETF. So $400 from YieldMax ETF, $200 of that value. So 50% of that is $200. I'm going to take $200 in margin, throw it into next week. Whatever I get paid next week from TSLY and GUI and YMAX, take that 50% of that value, throw it into next week, and keep on doing that. So pretty much, I'm just keeping cash. I want cash. I'm going to use the cash. The margin can do whatever the margin can do. I'm going to continue to use margin because if you do or do not know, with tax season coming up, margin interest, the margin interest you pay, you could write off. So why not do it? So margin will continue to reinvest into YieldMax ETFs and QDTE and YMAX, but the cash will stay cash, or I might even put into some treasury bonds or something of that sort just to get like a 4 to 5% yield while I hold it in cash. Because unfortunately, Robinhood doesn't pay you interest as if you have margin debt. They don't pay interest on your cash, which makes no sense. But you keep it in. You could keep it even in bonds, get a 4 to 5% yield annually, which is like barely anything on a monthly basis. But it's better than nothing. You could go ahead and sell out of that, and then, or I'll sell out of it when I'm ready to buy a contract. I'll buy myself another contract S&P, and I've increased my monthly income by $400, assuming that's how much I can earn on a monthly basis. If you go a little bit more risky, you can make $500 to $600. You go a little bit less risky, you make $300 dollars. But in general, $400 is what I've been seeing. I've been earning so far from S&P, and I'll continue to try and earn that much. And it's a safer position. S&P, safe. One of the safest positions you could really have, of course, is VOO, but VOO doesn't have same day trading or 1 DTEs or same next day trading. S&P does, but I don't use it. Also, S&P has a lot of trades happening, a lot of volume, so you get good prices for your trades. You get good prices on your contracts, so why not do it? So that is me. That is what my outlook is for 2025. That's what you're going to be seeing for the ongoing videos coming for the rest of this year. If you start seeing that the share counts are not growing as fast on these spreadsheets, that is why I'm using margin now to reinvest into these funds. Cash is going to be sitting there in cash, which I'm going to be holding off to go ahead and purchase more contracts because I've decided I have the time, I now have the experience, and I now have a strategy that works for me and my risk tolerance. Of course, is my risk tolerance. Don't recommend everybody to do poor man covered calls. If you don't know what you're doing, I would not recommend it. But I have experience. I have somewhat risk tolerance. I have the risk tolerance to go ahead and invest into poor man covered calls. I believe that it has possibility to work. And even if, say, the lower covered call or the lower leap option doesn't gain in value, I'll still beat it with the upper covered call with the selling I'll be doing. I'll still be ending up coming out on top. So yeah, that is the plan for 2025. That is the plan for YieldMax ETFs. May I change my plan in the future? I might. It depends. Maybe YieldMax ETF changes their perspectives and goes into growth like Curve because the competition is just so good. But so far, the way it's trending, doesn't seem like it's going to be that way. They continue to grow in the amount of money they have invested in their funds. They're like almost $2 billion, $3 billion invested or something of the sorts. They have a lot of money invested in YieldMax ETF compared to Curve. But in general, that's how my account's going to be looking. That's the strategy I'm planning to do. And I hope you guys enjoyed this video, and maybe you guys will join me on the journey to see how that strategy works out, to see if it's really worth it to hold the cash value and go ahead and invest it into contracts. And is it better to do that, or is it better to invest into YieldMax and grow your share count and grow your dividends per month? Because if you can see, before I even end this video, because you can see on the chart that we were growing month after month. We were growing. All greens except 2 months where we had a negative 0.86% and a negative 9.92%. Besides that, it's all green. 5.82, 3.72, 31. It's all green month over month, except for this new month, of course. But that's because we had a crazy month in December. But it's all green for YieldMax ETFs when it comes to share growth and dividend growth. So we'll see. May I be wrong with this? Should I just continue reinvesting in the YieldMax ETF? Who knows? I just personally think that value-wise and just contract wise, and also freedom wise, because I'm able to control my contracts. I'm able to control my risk tolerance depending on the market. I don't have a manager controlling that risk tolerance for me. I think I'll be able to create a better yield on with my own strategy, with my own money. But that's just me. That's just my lookout on YieldMax ETFs. No longer reinvesting cash dividends into it. Only margin, that's margin, 50% margin on the value of the dividends, and the cash I hold will be reinvested into QDT, YMAX, and all these other funds. So that has been me. Thank you so much for watching. Hopefully this turns out to be a good strategy and a good play for myself personally. Hope you guys enjoyed watching in my outlook, or listening to my outlook on the portfolio and how I'm going to be running it. Hopefully you guys subscribe, like, and join in on the videos to see how it performs. If you're new to the channel, I make a lot of video content like this. If you're not new to the channel, you know how it is. Every single month we make videos talking about my portfolio. Every single week we talk about dividends that are going to be received. And on Fridays we talk about just general topics that I want to talk about. So thank you so much for watching. I will see you guys in the next video on next week on Wednesday. See ya.